that investors need to be focused on being invested in risky assets, both in equities and in fixed income. In equities, we have generally over the last couple of months been at strategic weights, particularly in developed markets. We've recently gone overweight equities at a global level, really focused on Asia. Asia's driving that, with China and North Asia being the key areas that have pushed us overweight. But we think U.S. equities will continue to grind stronger. Vaccines, likely some form of new fiscal stimulus early next year. The new administration, all should be positive for U.S. equities over the course of the next year.
And Credit Suisse appears to be particularly bullish on financials as we head into the next year, seeing there was something undervalued and perhaps, will benefit from economic regrowth and rebound. But how much could shakiness in Q1 affect that outlook?
I think the key thing here is the combination of vaccines and recovery and growth. So financials have been hurt by low interest rates and very flat yield curves. But if we get vaccines by the end of the year and we get a rapid rollout of vaccines early next year, combined with some new therapeutics and get COVID under control, growth in the United States should recover on our forecast to 4.2%. Chinese growth is going to probably accelerate to over 7%. That should steepen up yield curves. It should improve corporate cash flows, reduce default rates. All of that is good for financials.
Right. Regma and Tanvi joining this conversation. What would that mean for the value trade in Asia? If you think Asia is going to spearhead the recovery next year and the gains in the capital markets, then do we see that shift, that rotation happen out of growth into value?
That's a great question. I think if you look across Asia, the value trade in Asia, from a valuation perspective, a momentum perspective, has been and is Chinese financials, both banks and insurance. There's a few other things in there, of course. There's energy and travel and tourism, but by a market cap basis, the largest elements of value are financials. So what we were just discussing, the idea that stronger growth, reflation of economies should be good for financials, should help that value trade. But we also think that those other key value sectors in Asia, energy and travel and tourism plays, will do particularly well. Hong Kong is interesting in that regard. If Hong Kong is able to reopen its borders with China, there should be an increase in Chinese tourism in Hong Kong that will boost retail activity and play into its real estate market as well.